What's going on, everyone? Jeff back with another video, and this one is very self-explanatory. 3 stocks to buy for August 2020. I have not made one of these videos in quite a while, but I have got some comments. I've got some people saying they would wish I would start making a 3 stocks to buy and 3 stocks to short videos again. And so I want to start making that a part of my video routine, where I am trying to produce more content for YouTube right now, and these videos are always a lot of fun. I know I am a couple of days late. It's already a few days into August. And right here, the first thing I have pulled up, as you can see, Google, Apple, Amazon, Facebook. So none of these stocks are going to be a part of the video today. I just want to emphasize owning all 4 of these companies is a fantastic idea. If you are involved in investing at all, you should already own these companies, continue to own these companies, and continue building positions. In my opinion, all 4. There's some other companies we could probably throw in there. You could probably throw Microsoft and Tesla and Nvidia in that same category. But I feel like any good portfolio should really be anchored by large positions in all 4 of these companies. They all had outstanding earnings, all of them growing to outstanding levels right now. This is time tested and time proven. These 4 big mega cap tech companies just keep growing year after year after year. What I really want to focus in this video though is companies that are very heavily discounted from the COVID-19 crisis and that have great return potential on the full recovery of the economy. So, I'm looking at my list right now. 2 of these companies are very tangible. You can put your hands on them. And even though people probably don't like to hear the word normal when things get back to normal, I'm going to put it to you like this. Things are recovering. Things are getting better. Even though everywhere you go, people are wearing masks and trying to conduct social distancing, business is pretty much being conducted as usual. And there might be a few stipulations to how the world is different now. But really, some of these stocks I'm going to be talking about today are just very, very heavily discounted at very buyable levels that I think should be added to your portfolio. At least put these stocks on your watch list, okay? So with that said, before we get started, guys, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. All right, so the first stock we're going to look at, guys, is Planet Fitness. And the ticker symbol is PLNT, okay? Now, this was a very, very high-flying company. The pullback in stock price seems very logical, okay? A lot of gyms had to get shut down. A lot of these fitness clubs really had to scale back during the COVID-19 crisis, okay? Even now, when you go into the gyms, of course, I'm a member at a Planet Fitness. You will see that they have spacers in between the treadmills that promote social distancing. They have a lot of practices. Employees constantly cleaning, constantly going around reminding people to clean up after themselves and clean up the equipment. But this company was killing it prior to COVID-19, growing like crazy. And really, this company is still in its infancy from its IPO, okay? Did IPO back here in 2015. And as you can see, the IPO did not add a lot of gains. It stayed in the $12 to $14 range, traded down around $12 at one point. And pretty much since that time, excluding a couple big pullbacks, this stock has been pretty much straight up ever since. The earnings are fantastic on this company, does not pay a dividend, still has a very, very small market cap. If you think about the dominance of this company, they're putting up Planet Fitnesses everywhere. If there's local gyms and local buildings going out of business in your area, I almost guarantee you there's a Planet Fitness could possibly be going in its place. Here in late 2019, it pulled back under $60, then made another big run almost up to $90, and then of course got destroyed here when COVID-19 entered the United States, and since then has just been kind of bouncing around. Right now, currently trading at $50 a share. And I just do want to point this out too. This company has great fundamentals. Not a lot of short sellers on it, but they are positive in profit operating margin. They are positive on return of assets. Like I said, if you are concerned that this is the type of company that couldn't survive some long-term chills from the stock market, I will point you in the direction of the balance sheet. They do not have an insurmountable amount of debt. They have about $1.95 billion and around $420 million of total cash. This is something people too are very, very dedicated to, is their level of fitness. Having a gym membership and being a part of a health club, yes, that is considered a luxury. But like I said, Most all Planet Fitnesses are opening back up, taking memberships. And again, another thing I will say about Planet Fitness is that the price for a monthly membership is very, very reasonable. If you get a black card, it's about $22 a month, and you can go anywhere in the United States and use Planet Fitnesses at full capacity. So I am making a strong buy recommendation here on Planet Fitness at $50. I think let this one go a little while. It might trade lower in the short term, but long term, this company is a winner. We're really being given a good opportunity to buy a really good stock at a very cheap price. All right, now let's move on to number 2. The second stock I want to talk about today, guys, is Yum Brands, ticker symbol YUM. Okay, so if you've been driving around before and you've been going to, let's say, a Taco Bell, Pizza Hut, KFC, Wing Street, please do not get that confused with Wingstop. You've thought to yourself, you know, I would like to invest into these companies. This is how you would do it, because Yum is the subsidiary owner of all 4 of these brands. This company was formerly known as Tricon Global Restaurants. In 2002, they changed to Yum Brands. This is another company that took direct hit from the COVID-19 crisis and is now working to recover their way out of it. Let's jump over to the chart for just a second. And really what I'm pointing to here is the level of price you're getting now is similar to about 2 years ago in July 2018, trading roughly around $75 to $80 a share. Now we're up around 90, but I still think there'll probably be another pullback or two in the meantime. Also, I did want to mention this. I have a student in Trade Alerts Pro that set a limit order to buy Yum Brands at $60 and her order filled. She is holding that position up over 50% on it right now, just in a couple of months. I know there's stocks that have performed much better during that period of time, but these are brands and companies that are going to continue to grow over the years. And even through some of these little volatile spikes, I think anytime it starts getting around $75 or $80 a share, if it gets in that $80 range, I'm going to call it a buy. Even at $90, I would not hesitate to buy. Did see highs of $120 back in September. One of the big reasons I've been looking at Yum, and I think it is going to be a very strong recovery play, is obviously their last earnings report. They did have to take a step down in guidance, but if you look, they beat Q2 non-GAAP EPS by 82 cents. This report was shelled out July 30th. They were coming in with an expected revenue of $1.2 billion. They beat by $20 million. And then restaurant margin of 2.7%, operating margin of 37.4%. So they blew all their numbers on earnings out of the water. And a lot of this has been the company's shift for how they have managed to keep employees working and keep people ordering food from their companies. Whether you're doing it through an app and doing it online, that is a much stronger and better way to conduct business than to just simply shut all of your restaurants down. So Yum Brands, I feel like, is a long-term stock you can get in now at a good price. Obviously, leave yourself some room to buy more if it drops again. And I would also keep an eye on this one too for future acquisitions. If there is a struggling company they think they can build into a long-term winner, you might see it under the Yum Brands hat in the near future. So I'm calling Yum a buy here at $90 and anything under it as well. And lastly, I want to talk about the Boston Beer Company, ticker symbol SAM. Now, this stock actually thrived during the COVID-19 crisis, only seen very, very small pullback in stock price. Really, if you want to go back to the 20th of March, was trading around $300 and is up almost 200% since that time, now reaching highs of over $800. The reason I mention this stock simply because share price is very high, but market cap is still very low. It's only a $10 billion company. They had an outstanding earnings call last round, and the stock's seen this big jump right here at the end of July from about $650 up over $800 on a massively strong earnings report. This company did show a lot of growth during COVID-19. Kind of tells you what people were doing while they were in quarantine, obviously. And two, I did want to mention this quick. It does have a very, very high share price of over $800 per share. But with all of the different brokers offering fractional share buying, two of them right off the top of my head I use a lot, M1 Finance and Robinhood. Another broker I also use being SoFi Invest. You can find links for all that down in my description box if you want to sign up for one of those. My suggestion would be is to buy fractional shares. A couple quick things I want to point out about this stock. Very, very strong fundamental company at an almost 10% profit margin, about a 13% operating margin, over 11% return of assets, and over 20% return on equity. The real gem and the real key to this company, and I think the real strength to it, is down here on the balance sheet. And now if this doesn't make you feel comfortable, I'm not sure what else is in the stock market and investing world. They actually have $86.72 million of total cash and only $76.2 million of total debt. So that is a company you can invest in and sleep pretty comfortably at night. The fact that they have more cash than debt and then over 47% quarterly revenue growth. I think even here at $800, this stock is a buy and would probably be close to 1,000 soon. And I think it has a lot of room to run from here. So go down to the comment section, guys. Tell me what you think about these companies. And then also tell me some companies that you're investing in and buying right now. I always enjoy hearing that stuff. Thank you as always for watching the video and have a great day.